In this video, I'm going to talk about the periods in Edexcel IGCSE accounting. Now, it's stated that it's 2020 May. Indeed, the exam postponed. The exam postponed. So that's why indeed it's the same paper. For November series, their exam paper is printed as May. They're still the same. So what I'm going to do, we're going to do the questions. And then also we will take a look at the examiner report. The examiner report. For the first MC question highlighted by the examiner report is question 7. What if the capital expenditure are treated as the reference expenditure? So what happened? This one will be overstayed, right? This one will be overstayed. Expenses overstayed. Expenses overstayed. That is, the profit would be understated. The second multiple choice question that highlighted by the examiners is question 10. So what is the effect when the rent paid in advance does not account? You have to understand that these rent paid in advance is indeed is current assets. Let me put it at full form. It's kind of current assets. So it's D. Option D. If you do not have this such kind of understanding, then you cannot grab the answer. After the multiple choice question, we're still in paper 1. We're still discussing paper 1. We will start with question 14. Now I will take a look at those questions that the examiner report highlights. That is in the case that candidate they did not perform well. So you can see there's the question. That's the question, and the marking. The marking guidelines. So let's take a look. For this part, so candidates need to prepare the trade payable ledger account. So how to do it? So you have to take a look. Purchases added up, returns out, deduct, payment made, deduct, discount received, deduct, refund received, added up. So think about, you have to take a look at it very carefully. That is, you have to differentiate whether it's a kind of deduction, or addition. Otherwise, you cannot grab the correct balance. You cannot grab the correct balance. Or you might make mistake. So right now, so let's take a look. The marking guidelines. So for the marking guidelines, we will do it together. First of all, you have to start with the opening balance. And then next, you can start with 1H230 added up, 1H230 added up, and then the interest charged, and then keep going. And then what's next? 55. This one. Refund received added up. So you try to put down all the added up in the credit side, and then next all the deduction. 615 deducted, 465 deducted, 145 deducted. This one 235 deducted. Then you can grab the balance. Now for part B, let's take a look at the exam report. Candidates they fail. Some of them fail to enter the correct details. What does it mean by correct details? Say for example this one. Balancing off. So balancing off is called set off. It's called set off. On the other hand, another one is, I would like to highlight is the refund received. You do not put down refund. You put down bank or cash book. So remember that you have to put down the correct details. Another part, state 3 reasons why there is a refund. Easy, right? Why there's a refund? Returns goods, right? Returns. So you indeed for this part, the scale that you can grab it. You can grab it from from the answer. Discount not given. You can see overdue payment. So the scales. Oh my God, the scales is to grab it from the data. You can grab all the answers from data. So watch the video, grab all the skills. For paper 1, question 16, part C, why the balance of petty cash book may be different with the cash held. Okay, now a lot of candidates they miss it. This is the opening balance. Okay, why the opening balance would be different? Okay, so it's not about the closing balance. Then if you do it as a closing balance, then wrong. Okay, remember that it's about the opening balance. Why the opening balance would be different? Because there are money stolen by the others. We are going to talk about question 17. This question 17 is about the bad debts and recoverable debts. The principal examiner report stated that starting from part C, okay, candidates, okay, they do not perform very good. So we will take a look part C, D, and E. Now for part C, we have to compare the provision for recoverable debts. The formula would be net trade receivables times the percentage given. Now I'll talk about is net. That is, you have to deduct the bad debts. You have to deduct the bad debts before you do it. So this one is 42140. 42140. It's not 42520. No, it's not 42520. So you have to do it is 42520 minus the 380 to get the net trade receivable as stated in the exam report. A lot of candidates, they do not know it. Okay, so if you do it wrongly, then this one part B, okay, you will do it wrong. Okay, because for part D you have to prepare a provision for irrecoverable debts. Okay, why we will do it wrong? Because you have to grab this one. You have to grab this one to the balance carry down or the balance brought down. Okay, don't put it in the income statement. Okay, if you put it in the income statement, it must be wrong. It must be wrong because there are a lot of candidates. Okay, they do not know it. They do not know it. Okay, so they always put it in the income statement. That must be wrong. Okay, it must be put it in the balance carried down. Okay, so what you need to do, you have to first grab the balance brought down. Grab the balance brought down. Okay, and then you try to compare the balance brought down and the balance carried down. As you can see here. Okay, so you have to add it up to make it balance, right? Okay, because there is an increase in the provision. Okay, so that's it. Okay, so that's it for part D. So the last part would be part E, with the evaluate reason. Okay, why they need to do allowance for double debt. So it's a 5-mark questions. So 4 marks for appropriate reason and 1 marks for the conclusion. Now I would say it's about the accounting concept, right? It's about the accounting concept, that is, do not want to overstate. You do not want to overstate the profits. So that's why you can make your information. This is the effect. Okay, effect of not overstating the profit. Okay, that is, you can make informed decisions. Okay, and be aware of the future losses. Okay, and there will be benefit. So this is the conclusion. The conclusion is the benefit. It's the benefit. Remember that. Okay, it's the benefit. Okay, you are benefit from not overstating. Not overstating. Okay, so remember you have 1 mark for conclusion. Okay, you can benefit from not overstating it. Okay, so here you can see in the exam report, a lot of students, okay, they do not refer it to the decision making process. Okay, so that is okay. There is called not well developed. Let's come to the last part for paper 1. Question 18. As indicated in the exam report, candidates, they did not do well in part C and D. For part C, candidates need to do a cash book. Okay, need to do a cash book. So let's take a look how to do it. We will start with the opening balance with a debit. Okay, and then you have to understand all these. Okay, so what are these adjustments? Standing order is a kind of payment. We have to deduct it. Bank interest received, we have to add it up. Dishonor check, okay, we have to return it. That is deduct. Okay, So what you need to do, so you have to put down them in the corresponding areas. Okay, deduction 345. Okay, deduction 265. Okay, and then this one received added up, and then you will have the balance carried down. Okay, in the exam report, it talks about the disappointing. Okay, so why is that? The common error, once again, incorrect details for the transactions. Okay, so what does it mean by incorrect details? Okay, if you just put down standing order, it will be wrong. It's not called standing order. No, take a look here. Okay, here, it's not called standing order. It's called insurance. It's called insurance. Let me give you one more example. It does not called. Okay, you do not put down this on a check like this. You put down with the name Jones. This on the check. Okay, it's very important. Okay, to put down the correct details for transactions. Let's take a look part D. Okay, for part D, you have to start with the balance. Okay, you have to start with the balance. 615. Start with the balance, and then you have to do it the bank reconciliation statement. So you add up the unprecedented check and deduct the outstanding lodgement. Okay. Now, if of course there are alternative ways. Okay, if you know how to do it, but still, a lot of candidates, okay, they show their understanding, okay, but they do not know when to add or subtract. Oh my God, they do not know when to add or subtract. So it's a kind of misconception, I would say. Whether it is add or subtract, it depends on what. It depends on whether you start with the balance per cash or whether you start with the balance per bank statement. Okay. So remember that. Okay, whether it's the add or subtract, it depends on what you start with. Okay. Okay, if you start with the balance per cash book, you will add up the unpresented checks and deduct the outstanding lodgement. Okay, vice versa in the alternative presentation. So that's all for paper 1, and we are going to move on to paper 2. Okay, right now we are going to take a look at the paper 2. Okay, the paper 2 question. So there are 2 questions in paper 2. For the question 1, so this is the partnership. Okay. So I've put the case here. Okay, the case. Okay. So you can take a look at the case. So let's take a look at the question. Okay. For question part A, candidates need to prepare an appropriation account. For part B, so the candidate need to prepare a current account for a partner. For part C, candidate need to prepare the statement of financial position. In the right top corner, I've also put down the exam report. Okay, written by those principal examiners, so we may better understand what we need to learn in this question. So let's take a look. Part A. Okay, the preparation of the appropriation account. First of all, okay, we will start with the net profit. Okay, we start with the profit for the year. So what you need to do, so first of all, we need to grab the profit for the year. Okay, that is 78000. And then what we need to do, okay, so there are some adjustments we need to do. For the interest on capital, okay, we need to deduct it. Okay, and for the salary, we also need to deduct it. Okay, so where to find these? Okay, so we can here. Okay, so this is how we grab the information we need. Okay, say for example, for the interest on capital, so it is 100,000 times 10%. Okay, 100,000 times 10%. For another partner is 50,000 times 10%. Then you can have it. Okay, then you can have it. So next, okay, we will have the profit, for distribution, and then we'll share the profit according to the ratio 2 and 1. Okay, so how to do it? So for this one, it's 51000 times 2 over 2 plus 1. Okay, another one is 51000 times 1 over 2 plus 1. Okay, so it will be, you can see, okay, it would be balanced. Okay, both the figures will be the same. So this is for part A. Now for part A, in the exam report, it talks about that most students they scored well in this part. Okay, however, the common mistake, what they do, they include drawings. Now this one, only include only included in the current account, okay? Current account, okay? Adding the interest on capital, wrong, okay? It should be deducted, okay? It should be deducted. Third, okay, you do not show the names, okay? Show the names of individual figures, okay? You must do it. You must show the name, okay? And also you need to put a heading, okay? You need to put a heading. So these headings, they're very important. Headings, okay? And you need to show the names. You show the names, okay? So these are very important. So this is all for part A. So right now we are going to move on to part B, okay? This is to prepare a current account for a particular, partner, okay? First of all, you have to check out the balances. So it puts that debit, okay? So you put it in the debit side. You put it in the debit side. And then, as I said, for drawings, okay, you need to put it, in the current account. So you need to check out the drawings, okay? So you need to check out the drawings. And this one, okay, you need to put it in the, in the current account. Next, for this, for the interest on capital, okay, you need to put it here, okay? You can grab it from part A. For the salary, you can also grab it from part A. For the share of profit, you can also grab it from part A. So all these three items on the credit side, you can grab it all from part A. So this would be the skills, okay? Grab all these from part A. And then you can, after all, then you can have the balance carried down and the balance brought down. Let's take a look at the exam report. So in the exam report, it talks about the so candidates needed to bring down the balance. Okay, remember that some of them they missed the opening balance. Then it will be wrong. Okay, they use abbreviation for labels. No, okay, you cannot do it. Okay, so remember that. Okay? Don't use some short-term form. Okay, for the current account. Okay, put in the whole name. For part C, okay, we need to prepare the statement of financial position. Let's take a look at the information and we will classify them. So let's take a look at them one by one. These, okay, first of all, for capital and current account, it will be run to the capital, okay? Allows for current asset, current liabilities, and the other receivable, current assets, okay, non-current assets, current liabilities, current assets. Okay, so this one is the capital in the current account. So the skills will be like this. You try to differentiate all this into non-current assets, current liabilities, capital, and current account. Okay, so only by doing this, then you can grab the answer. Okay, so right now I'm going to do it quickly. First of all, we start with the non-current assets. And then with the current assets inventory, then the trade receivables with the deduction of the allowance for double debt, and also there are other receivables, cash. Okay, so next for the capital, you can grab it. Okay, here you can grab it here for the capital. And the current account, for the current account, you have to remember this one, this one is the new one, okay? It's the new one. You grab it here, okay? You grab it here. And another one, 3950. There are a lot of candidates, okay? They have no idea how to grab this 3950, okay? So right now I'm going to show you, okay? So the balance will be 2800, shown in here, 2800. So let me put it down for Jeff's current account. So 2800 as a balance, and then we will add up the interest on capital, from here. Okay, the interest on capital here. And then next, we have to also do the share of profit. The share of profit, this is 17000, so we have to add it up, plus 17000. And don't forget, the most important one is called the drawings, as I put here, okay? You have to minus the drawings, minus 28750. Then you will have, this is a negative number 3950. So this is how you get it. Okay, don't just copy it. Don't just copy it. Okay, you have to do the calculation. Okay, let me do it again. So what you need to do, you need to start with the balance botyan. Start with the balance botyan. This one is the balance botyan. Add up the interest on capital, and then you add up. This one is the share of profit, and you have to minus. Okay, minus the drawings. Deduct the drawings. Then you will have a negative number. So you have to put a bracket. Okay, so after the capital and current account, and then now the last one is to put down the liabilities, including trade payables, and also other payables, the other payables. Okay, that's all for question 1. So question 2, there are several parts for this question. Okay, for part A, candidates need to prepare a manufacturing account. Okay, so you have the candidate need to do it from prime cost and compare the production cost. For part B, candidates need to prepare an income statement. Now for part C, okay, there's a short question here. Okay, so let's take a look one by one. So for part A, candidates need to do the manufacturing account starting with the prime cost. After you grab the prime cost, what you need to do, you need to put down those these. Okay, so these are the factory overhead depreciation. These are the indirect production cost. So so what you need to do right now, okay, you need to take a look the question, and then grab grab these. Okay, grab these data. Okay, say for example, we will start with the depreciation. Okay, factory machinery. Okay, for the factory machinery, okay, we need to compute the depreciation on our own. So it's 20% per annum using the reducing balance method. Okay, so let's do this. Okay, so what we need to do, so in the reducing balance, okay, we will make use of these. Okay, so the answer will be 40,000 minus 14400, okay, to grab the net value times 20%. Okay, so then you will have this one, 5120. So this is the depreciation expenses. Okay, so let's move on. So we'll move on to another one. It's called the rent, rate, and power. Okay, so let's take a look. The rent, rate, and power. So you can see, okay, there's 4500 for the factory and 1500 for the office. So what you need to do, okay, you just need to put down this one. Okay, if you put on the office, no, okay, because okay, we'll only include those indirect production costs. Now for the wages, okay, it's not just about 1500. Okay, we have to add it up. This one, okay, we have to add it up. Okay. Now and then for next, okay, we have to add up the opening goods. Okay, add it up, and then and then we have to deduct the closing work in progress. Okay, and then you will grab the production cost. So let me mark it down. So for this one, for the opening work in progress is add. Okay, this one for the another one, okay, is subtraction. Okay, so then you can grab the production cost. So next we are going to move on to the income statement. Okay, for the income statement, okay, we will start with the revenue. Okay, we'll start with the revenue. So the revenue would be 68,000. Next we are going to do is the cost of sales. Okay, first of all, okay, we need to put down the opening inventory 4730. Okay, the closing inventory 5180. So where can you grab the cost of production? Yes, from here. Okay, from part A. So remember, so you have to record it. Okay, this one you need to grab it from part A. For the cost of production, this one you grab it from part A. So then, okay, let's go to the Okay, then you can have the gross profit. And then let's take a look at the expenses. First of all, we need to start with the administrative expenses. So this one I would say is quite tricky, okay? Because here is 13745. However, in the answer is 11725. So you can see there are some differences, okay? So why is that? Why is that? Because you have to take a look at the question very, very carefully, So there are adjustments, that you need to do. That is, there is a prepayment, you can see, right? So there is a prepayment stated. So remember that, you need to deduct the prepayment, Now for the rent, this one, 1,500, you can grab it here. This one's quite easy. 1,500. You just grab it from here. And then for the wages, we only do the office one. Then you can grab the profit for the year. Now, I would like to take a look at the exam report with you for this question 2B. For question 2B, few students they've omit the cost of production. As stated here. So you must recall that, for manufacturing account, for this one, manufacturing account, usually, what we need to do, for part A, we will have the cost of production. And then this cost of production will brought to part B, for the income statement. So this is a kind of, I would say, typical question type, So you have to recall this one, So you grab the cost of production from part A, from part A, but not here, You cannot find it here, You grab it from part A. So this is the first thing I would like to mention, The second thing, some students, they omit the label for gross profit, and this one, they use the old terminology for net profit, So remember, right now, starting from, I would say starting from this right now, don't put down net profit, no, it must be wrong. It's profit for the year, It's profit for the year, So that's why it's very important for students to read the exam report, Otherwise, you don't know what are the common mistakes. So now, right now, we are going to take a look at part C, So why it is necessary, to take a look at the payment in advance, blah blah blah. Indeed, there are two kind of adjustment if you recall the question. The first one would be the factory expenses. This factory expenses is accrued only. So the first one is the accruals. The second one is the prepaid in advance. That is, we call it prepayments. So these two adjustments are very common. These two adjustments, they are very common. So right now you may take a look at the exam report. It talks about students, they were able to name it. To name is referred to the matching concept. Now, however, they were unable to develop it. So what you need, how to develop it? So why don't you take a look here? Can you put it down in your notebook? Is to match the revenue and expenses, within the same period. So this is, I would say, a model answer or suggested answer or typical answers for matching concepts. So right now, can you put it down in your notebook? So it is to match expenses and revenue within the same period. This would be the last question. The last part of the question. We'll start. There are 3 parts in part D. So it provides a new information is the ratios. So you can see this is the current ratio, the current ratio and the liquid ratio. Now the formula for the current ratio would be current asset over current liabilities. On the other hand, for the liquid ratio, the formula would be current asset minus the inventory minus the closing inventory over current liabilities. So the differences lies on whether the inventory is included in the calculation. So let's take a look. As you can see, the current ratio remains the same, okay, remains the same over the years. However, the liquid ratio drop. So you can see the differences lies on the infantry, okay? The differences lies on the infantry. So right now we can check out the answer. First of all, the current ratio, there's no change, okay? No change. That is, remains at 1.50 to 1. However, okay, there is a drop, okay? There's a drop in the liquid ratio. That is deterioration, okay? Deterioration from, from 1.02 to 0.85 to 1, okay? So right now, okay, we have to talk about, okay, to explain the disadvantages or the drawbacks of the deterioration of the liquid ratio, okay? So this one, okay, in the other sentence, so this is the effects of the deterioration, okay? So what happened to the business, okay, when facing a drop in the liquid ratio, okay? So that is, okay, you have to recall. So what is the purpose of calculating the current ratio? That is to measure the abilities to pay the short-term liquid assets, okay? The short-term liquid assets. So here, so you may mark it down. So this would be, okay, indeed, the purpose of calculating these liquidity ratio. That is to measure the ability of meeting the short-term obligations, okay, with the liquid assets, okay. So this question, okay, if you want to get full marks, okay, you must explain why there is a drop in the liquid ratio, okay. That is, okay, the business is holding more inventory compared to the last year. Now for the last mark, okay, for this mark, okay, you have to, a candidate, okay, need to understand the differences between the current ratio and the liquid ratio, okay. So that is, okay, whether the closing inventory is included in calculation, okay. This is the only way for candidates to get full mark. Now in the exam report, it talks about that. So students, okay, when they evaluate changes, okay, they know that, okay. So both current ratio and liquid ratio, okay, they are used for measuring the current, the abilities, okay, of the company to meet their obligations. Now, however, okay, okay, let me mark it down. A lot of candidates, they know, okay, the purpose, okay, of that, of calculating the ratios. However, okay, a lot of candidates, they do not talk about the inventories, okay? They do not talk about the inventories. That's why, okay, students, okay, lose marks, okay, in this part. Okay, you must talk about inventories, okay? So let's go to part D, part D, the subsection number 2, okay? So the guys believe that the liquidity has improved, okay? Is it correct or not? Okay, of course it's wrong, right? Wrong. No. 1 mark, okay? Indeed, the ratio is deteriorate, okay, if you recall, okay? From part 1, okay, deteriorate, okay? So you just put that no, 1 mark. So most students get it correctly, okay? So the last one, okay, is state about one way to improve the liquidity, okay? So one of the ways to do it, of course, say for example, you struggle for more time, extra time, okay, to pay, okay, to pay the obligations, okay. So 1 mark for the identification and 2 marks for justification. But in the exam report, it talks about that, okay, most students, okay, they will struggle to answer the question because they do not focus on the elements of liquidity ratio, okay, the elements of liquidity ratio, okay. Think about what are the elements of liquidity ratio. It is to meet the short-term liabilities, okay. So in the answer for justification, okay, that is, okay, let the suppliers to give you more time, okay. So then you can have more time to meet with your short-term liabilities. So So this is all, okay, for the paper in this year.